Hello? Yes, good afternoon. I hope you can see my screen. I'm currently at the browser, so you can see from here we have the browser, and then I'm on this page here, return tradable bonuses. So I said it in the morning, I'm going to repeat it now, that if you are with this broker FreshForex, then you stand a chance of getting up to 200% whichever amount you deposit, as long as it's 500 and above. So you need to read this, read everything on this page, and then ensure you read the terms and conditions for this bonus here. See to it that you understand everything on this page before you apply for it. Ensure you understand everything, read all this, read everything before you finally click this button at the bottom. So this is the one that after you click it, it should take you to the page where now every other thing is. So that should be done. Let's move to today's topic, which is we want to learn how to predict the market direction. Like from what is on the screen now, you can see how to predict price movements in the forex market. So this is everything. Like you have to know exactly what will happen next. You cannot just trade any chart unless you understand exactly where we are from and where we are going. So before you look at a chart, you have to know, like just a second, anytime before you trade anything, ensure you understand the direction very well. That's the most important thing. So that's what we're going to look at today. We want to find out exactly how do you know that this pair is going to keep falling. How did I come up with these lines? Like how did I draw this line here, and then I suggested that maybe the price will come back to this place before it heads to the lower side. How did I come up with this one? So we're also going to look at others. There's also something here. I also had this drawn. So I'm going to explain how did I know that when price comes from this place, how is it going to continue downwards or it will now go to the upper side? This one, what will happen on this pair? How do you know exactly what's happening? So that's what we're going to look at, and basically we are measuring on technical analysis. We are not looking at fundamental, only technical and only what's happening on the chart. We are not going to look at news and anything like that. So the first thing you're going to do is to start from indicators. Like how do you use an indicator to actually understand that the price is going to proceed a particular direction or it's going to change direction. So the one I'm having now, this is called an envelope indicator. Let me delete it so we can attach it afresh. We have the chart loaded already. Here's the chart. This is the line which we had on the previous chart, and then there's also this line here. So assuming you have a chart like this, like the one I'm currently having on my screen, this just used to JPY. How do you know that the price is either going to reverse or it's going to continue to the lower side? So I've mentioned that we'll start from indicators. You're not going to look at these levels, but I've just drawn them here for the sake of it, but we'll start from indicator. How do you use an indicator to actually understand that the price is continuing or is reversing? So the first one is called envelope. The first indicator that I used to know the trend here. Just go to insert, then there's indicators, and then you move to trend immediately, and then the very third one is called envelopes, and the settings are supposed, these are the default ones. It's 14, and then the moving average is simple, apply to the close of the price, and then you click OK, and it's added on the screen. So with this indicator, as long as the price does not break below it, we are upwards. like you can see from this point here, there is this one here. It's actually this candle, this long candle sent a tail to this support, this indicator, but then it fell to close below it. It went up, came back to the same place. That is a support, a good support there. Price went up, it came back to the same place. That is also a very good support. Then it went up, it came back to the same place, and that was a very good support. So we actually did buy it from this point. I bought it from this point. I also bought it from this point, but then I bought it here. It didn't hit my take profit, and then it came down to the lower side. So now this now a change of trend. This is a possible change of trend. Like we are now reversing. You're supposed to look for a sell, because as long as now the price is below this moving average, the trend line, I mean the indicator, we are supposed to look for a sell. So this is just one indicator. As long as the price remains above it, we expect it to continue to the upper side. So this is just similar to normal moving average, where as long as the price remains above a moving average, you expect the price to continue that direction. So we'll not use this one alone. The indicator alone is not useful. You have to add these levels to it. So as you can see, this one here, which is a support, and it's called a dynamic support. Price went up, came back to the same place, a dynamic support. Then it went up, it came back to the same place, another dynamic support. So as you can see, we are somehow making higher lows. That is a lower low, the very one on the lower side. This one, this is lower low, and then we see the next one, higher low, higher low, higher low. Then the next one, there's another higher low, higher low. So this is like the last one. As long as the price remains above this indicator, like you see, price goes up and comes back to the same indicator, it goes up, comes back to the same indicator, but does not close below it, it means you're still upward. So along this indicator, which is the dynamic support, you're supposed to look for pin bar for buying. Like look for every setup that shows you're supposed to buy. Just a second. So anytime my screen goes off, please you need to inform me. Like anytime you realize that it is freezing, you just show me. There's a level here, support. Price goes up, a support. It goes up, a support. It goes up, a support. Just a second, I get rid of this. There are certain things you don't need on the screen, so they keep cropping up every time. We have to get them out first. So like as I was saying, we have this one here. I say that as long as we have D minus, like D minus being above D plus, and then we have the columns of MACD below 0, 0, that is a sell. So your job will be simple. Wait for price to move away from this indicator, then it retraces back to the same place so that we can sell it. It should make some sense. I've basically just added 3 indicators. We have the first one ADX, and then we have the next one, which is MACD. So the reason I'm using these 3 is because I find them very useful, especially when you want to find the overall trend. Like with ADX, there are these 2 lines. We have the upper one, and then you have the lower one. Then you have the main one. This green thick one, blue, I don't know this blue, whichever color, this one stands for trend. Then the next one here tells you which trend is active. So if you have this one, the green one, above this level 25, and then the upper one, which is in this case is red, is above the green one, then it means the downtrend is dominant. So like in this case, we have this downtrend. You can see, to confirm that we are in downwards, use this indicator, this D minus being above D plus, and at the same time you have the columns of MACD being below 0.00. So all these indicators sell. You're supposed to look for a sell and expect price to move even further to the lower side. So we want to use one last example for a buy so that at least we explain what we are saying. Just a second. I will use SP500 because it looks much better. It has been in an uptrend for more than a decade now. Here, so I will start from this point. We have a line there. So assuming you are here, you see this point. At this point, then there's that point there, and then there's that point. So I mentioned at the beginning that these lines you're seeing, these are called columns of MACD. They're the main one. Then there's this red dotted line. This is called the signal moving average. So as long as we have the columns of MACD above 0.00, and at the same time you have the green one, D plus, being above D minus, then this is upwards. Your job will be simple. Look for buy positions upwards, and that buy position should be that price goes up, then if it comes and sits on this trend line, like this indicator, then that's a good buy. That is just one way to get a trend. You add indicators, just ensure you have the indicator and then you understand exactly how to read them well, which I've also tried to explain on this one. There is this active trend here. Just a second. We have an active trend. So I'll use this section also to explain just the same thing. It looks much more clearer. So as you can notice, I've actually added this period. I've added period from 14 to 21, and I want to add it again to 52. So the reason I'm adding the period is not because that's not just any figure. I actually back tested 52 on the strategy test and realized that 52 is also a good number. So on this chart, from where price is at this point, you can see there's a transition. Like this indicator went below where price is, the upper one, and then the green one was above the red one. Then we had the main one being above 25, which means the dominant trend in this case, like somewhere here, was uptrend. This was an uptrend. The entire place here was a very good uptrend. So notice also, while that was uptrend, we also had this being above 0. MACD was above 0.00, and then we have the green one was above the red one. At the same time, we had price being above where the envelopes was. So these are very good buy signal. This is what tells you exactly that we are now continuing upwards, and therefore you're supposed to continue buying it even higher. So the best way to buy is not when the price has moved far away from this indicator, but when it has come back to the same indicator. So price will go up, then retrace back to the same place, and you pick a buy from that point. So it will move up, then come back to the same place, then you buy it. just a second, you buy it from that point, then price will continue up and then come back to the same place here where you're supposed to. It has now gone below it. Your job will be simple. You check if also this indicator is showing you that the trend has changed to the lower side. If that is true, then we are selling. So I think I will need to put a note on that one. Just a second. I want to put a note so that you are able to refer to that. So unfortunately I can't create a good one, but let me just use the normal right tool. Should be big, around 14. So the first thing, to know the trend, to know an uptrend, we start with an uptrend. To know an uptrend, we use two items, ADX, D plus should be above, the D minus. That's the first condition. Like if you want to know that the trend is upwards, you have to have like D plus being above D minus. That's the first thing, and we'll put it on the screen. That's the very first condition. Then the next condition, the bars of MACD must be above 0.00. That's the next condition. And then the last one, envelopes must be below where price is. Envelopes must be below where price. So I've tried to explain these three, what an envelope means and what MACD means and what ADX means. Both of them just mean the same thing. So anytime you're on a chart, then you see something like this, you notice that this is true. So one thing which I've not mentioned, an active trend, the main one has to be above 25. So that I have to mention that also now. ADX main must be above 25 level. 25 level. 25 or 25, whichever. So like that. So these three are very important. Like you need to know first of all the direction. That's the most. And to know the direction, I've illustrated already that you read from MACD or ADX or envelopes, and envelopes has to be attached with the main one. The main one has to be incorporated in your analysis. You have to know that this is the main one. This thick line is the main one. It shows you the trend. As long as it's above 25, and then we have the green one being above the red one, then the lower one is true. It's above 0.0, then that's an uptrend. So basically, we illustrated this section from this point to this point. That's what we just illustrated, that we are now in an uptrend. They are supposed to look for a buy. Let's check a case where there's a downtrend. We have this point here, then you also have that point. So the reason I'm insisting that this is a good one is because you can see from this point here to this point. Give me a second. You can see like from this point here where I'm circling now, where I have my mouse pointer at, to this point, the columns of MACD were below 0.00. At the same time, we had this one, this handle D minus being above D plus, and at the same time we had the trend, the main one, being above 25. So this was an active downtrend. In this case, you're supposed to look for a sell, especially when price pulls away from this line and then it comes back. That instant when it comes back, you sell it. It's a sell. Then this was a very good sell, though it didn't come back at the same place. You're supposed to look for a sell, and you're also supposed to sell also when price gets back to the same place somewhere. So the best case is when the price comes back and fails to break above that indicator. That's the best cases. So far we've measured on indicators. That does not mean that only the indicators can be used to identify the direction. You can also use levels. Like I have an example of a trade here. There is this one here. This is a level. It's a very good level. You can see that in the past price was somewhere here. It went up to that point. Then you can see a drop. Then it went up somehow up to that place. Then it went down. Then it came back up to that point. Then it went down. And then it went back up to the same place before going downwards. So this one here, you can see that any attempt to come back to this trend line tends to fail. Like when price comes back to this place, it bounces back to the lower side. It comes back to the same place, bounces back to the lower side, comes back to the same place, bounces back to the same side, the lower side, then it comes back to the same place, and then it bounces back to the lower side. So what this means is simple. We actually expect price to proceed even further lower. Like there's this one. This is the highest high. Highest high. Sorry. That is the highest high there, highest high, and then we have a lower high, lower high there, and then you also have another one which is another lower high. Then there's another one here which is another lower high. So what this means, this setup means that the price is likely to move even further to the lower side. If you're on this chart at the moment, then the best you should be doing is to wait for a sell from somewhere here. Like you can literally say that the price was below from this point, it went massively upwards, then it bounced from that point, it came back to the same trend line, could not close any higher, it went down, back to the same place. The third time nothing happened, the fourth time nothing happened, and we expect the fifth time price should come back to the same place and bounce again to the lower side. So basically we are waiting for a sell from this point. If you're on this chart, then expect a move even further to the lower side. Something like this is likely, something like this, something like this. So maybe the price may want to come back in the future up to that trend line before it continues even lower. So you can see, like, even without being told that this place has been holding a resistance, in case price goes above this trend line, then that's the best place to buy it. It means that we have actually shifted and we are buying it now. So this is another way. This is just one other way you're supposed to look for. You can know exactly whether the price is continuing downwards or is going to reverse. We've discussed like 3 things. Identify this place. There has to be a level, and it must have been used multiple times. Then if it is to be broken, it has to be with a big candle. Like one big candle has to open below everything and close above the same trend line. So you're on this chart at the moment, wait for price around here, or there's a level here which is also significant. It's just a resistance which was broken upwards, then there's another break to the lower side, and now we are on the seller side. So far we've looked at indicator, this indicator, we've also looked at trend line, but we've not looked at horizontal levels. This is a diagonal level. It's also a good one which you can use to identify trend. We want to look at the horizontal one. Horizontal are just support and resistance levels that are horizontal in nature. Like we have this, we have there's a support, a support, a support, a break below, up, a support, a support, a support, there's a break below, up, resistance, resistance. So this is a key level. It just shows you that we tend to turn around from that point. Like from the lower side, you see price went up, came down, went up, came down, then back to the same place, and it bounced from the same place. This was a sell. So in case price comes back to the same place in the future, that is a sell. We expect a reversal. We expect the movement to change to the lower side. So this is another way you can know levels. Just a second, let's check another chart. There's another clear one where those are horizontal levels being used perfectly. We have this. I'll go to the 4 chart. This one here, horizontal resistance. Let's start one. So the very first time a level is used as a resistance, we don't do anything. This is the first one. We'll not trade anything at that point. Then price goes down. Then if it comes back the second time, we are now interested in a trade. Then it goes down, down, then comes back the same place, still a sell. It goes down, comes back the same place. This is still a very good sell. So what you should be doing is that anytime you identify a level like this and price moves away from it, you don't do anything. You actually wait for price to come back to the same place, then you look for a sell from it. Expect a turnaround from that point. Like the first one, we did nothing. It went down, came back up, down, then back to the same place. We took a sell. It went down, it came back to the same place. We took the second sell, went down, back to the same place, and this was the third sell. So you sell at the places where you expect the price to turn around from. If the price is moving upwards, then you take a sell where you expect it to turn around from. And assuming the price is going down, like in this case, we have two levels here, a support. We have a support here, a support, a support, a support, a support. So anytime you expect price to bounce or turn around from a point, then that's a very good place to look for a trade. Like you can see, we have a support here. We have a support there. We also have a support here. Then we also have a very good support here at that point. Then this place has been broken. The same place where I actually was buying, I kept buying, has now been broken to the lower side. So the instance when you see this has happened, like the price has gone below a level, you now switch to sellers. You now look for a sell. You're not supposed to buy anything that is below a key level. So this is another way you can help understand direction. Anytime you identify a level like this, a very key level you're supposed to buy from that place, then somehow it has been broken. The same place you are buying from is the same place you sell from. So as I was mentioning with the trend lines, with the dynamic support, you don't sell when the price is broken below, but you wait for price to get back to that place so that you sell it. So probably you could have taken a sell from that point. You could also have sold from that point. So either way you can see I was buying, there's a break, I'm selling. You are not selling anywhere where somebody else was not buying. You only sell where somebody else was buying. So I hope that should make sense. Like before you sell at this point, ensure that previously somebody was buying from the same place. And before you sell at the very top here, ensure that a lot of people are selling from the same place, or somebody used the same place as a very good buy place. So we've looked at like 3 ways to identify the direction, where the price is going to move. We've looked at the indicator, where you only need to attach these 3 indicators. Of course, there are tons of indicators. You don't have to use one indicator. There are a lot. You go to insert, then indicators. There are a lot. There are several. These are all indicators you could possibly use. So I've only mentioned 3 because I think they are some of the best indicators anyone can use, but there's another one which is moving average. It's also a very good one. There's also this one. I don't know whichever name you click it, then it adds itself on the chart. This was a very good one you can use. This is also for the trend. So I don't trade that one. That one I don't use normally. I only use envelopes, ADX, MACD, and also moving average, which I've not added in this case. Moving average 200 is okay. Yes. So we have that one. We've looked at trend lines, how to use trend line at least to gauge the direction, and last we've looked at how to use levels like horizontal levels. This is another case where trend line has been used to gauge direction. So you can see there's the highest high, lower high, even lower high, then all of a sudden price has gone above everything. So this is a possible indication that price is likely moving upwards. If you see anything like this, like you're supposed to sell, keep selling, then somehow price breaks above it with a big candle and remains there, that's upwards. You're supposed to look for a buy and take profit only when price was touching this trend line here and also here. Buy from somewhere there, have a take profit there, and then have a last take profit here. So that should bring us to the end of today's webinar. We've looked at, I think there's something we've understood. I've not looked conclusively on horizontal levels, but this is just at least a very good example of how the whole thing works, how you can use it to understand direction. Ensure that you identify key levels being broken, no retracements very well, then ensure the levels have been used multiple times, and then also we've looked at indicators, everything, just everything I think now. So that should bring us to the end of today's overview webinar. I hope we meet again next week on Wednesday at the same time. So that should bring us to the end of today's overview. And there's something I said at the beginning. I'm going to repeat it. I hope you can see my screen. So I mentioned that there's this deposit bonus 200%. This means that anytime you deposit amount not less than 500 USD, you are also given a bonus of 200% of it. So the only thing you need to read everything that concerns this bonus. Just take your time, read everything, understand it very well before you click this button at the bottom. So thank you very much. See you again next week at the same time.